name is Jenny Brown, and I am the managing partner of Brown and Dutton Law Firm in Marietta. We practice primarily domestic litigation, and the majority of our practice is divorce. And today we have with us Jennica Moore. She is the managing director of Carson Madison, LLC. Jennica is a certified accountant, a certified fraud examiner. She's a professor, and has published numerous academic journals in numerous academic journals. And today we're going to talk about property division and divorce, who gets what, and more of what Jennica specializes in, which is divorce forensics. So Jennica, can you tell us a little bit about you and about your business before we jump on in?
Absolutely. Like Jenny said, I am the managing director of a forensic accounting CPA firm. We work with divorce attorneys around the Atlanta area, and we have three main specializations. The first one is fraud prevention. The second one is fraud detection, so fraud investigations. And then the third part is divorce forensics, and that's what we're going to talk about today. A lot of people don't know what forensic accounting is, so I'll start with that. Basically, we use accounting and investigative skills to, in divorce cases, assess marital property and figure out where the assets are, who owns what. Today, we're going to talk about what the difference is between marital and separate property. But I'm excited to be here.
Yeah, we're really excited to have you. I think it's interesting because the world is changing so much and finances are changing so much. And something that you and I have talked about is how, like cash apps like Venmo and Cash App and even cryptocurrency, which we're going to talk about later in the year, but finances are changing, assets are changing, and we have to evolve as experts in our field to what's new. So it's difficult, but I think that you've got some really good ideas and insight that help people out when they're dealing with divorce, especially when people are trying to hide assets, which unfortunately happens a lot of the time.
Yes, absolutely. So with Venmo and the Cash App, it is a lot harder to track some of the funds. But we talked about this earlier. You can look at lifestyle, and if their spending is not what they're showing on their tax returns or their financial statements, you can kind of back into the numbers and see if there is more cash that they're either putting in a safe deposit box or they're putting in cryptocurrency. That's very popular right now. People that are hiding assets, they will purchase cryptocurrency. If the other spouse is unaware of, even what is that, they really need to hire an expert to come in and look for stuff.
Yeah, for sure. We have, we've had it come up more and more often, and it's so unknown. And since it's not regulated, cryptocurrency is a whole nother beast to tackle. But let's jump right in and just talk about generally separate property and marital property. Well, actually, let's go over the role first of a CPA. How does that work in a divorce, and what does that look like for the client?
Okay, so the CPA is an unbiased third party that is hired by the attorney. The client pays for it through the attorney so that you're under the attorney-client privilege for the work documents. We perform all of our work as though we are going to go to court. So we want to make sure that we have documentation on everything. We look for hidden assets. A lot of times clients misunderstand our role. Our role is not to advocate for the client. That is the attorney's role. We are an outside third party providing an objective opinion on financial issues. So we do charge our retainer upfront, and the reason that we do that is because our opinion is objective. So we're not fighting for the client, and if they don't like our opinion, we might not get paid. So that's how we keep it separate. We want to make sure that our opinion is completely unbiased. Let me give you an example. So let's say I am hired from you, and then I'm representing a client, and the client comes to me and they say, "Oh, I think this spouse is doing this and hiding $50,000 a month," and then I do my analysis and I find that that's not the case, and that's not what the client wants to hear. I have to provide objective, unbiased opinion. So it kind of gets confusing. The attorney is the advocate for the client. I'm an advocate for my opinion, my financial opinion. So hidden assets, undisclosed assets. So they might not necessarily be hiding them on purpose. They may have forgotten to include them, especially if one of them handles all of the finances and the other one is completely out of the picture. Value certain assets such as stock options or a business. We talked about this. Sometimes a business tax return will show a loss or not very much income for tax purposes, but we add back in certain unnecessary expenses. So country clubs, or some of those are not tax deductible right now with the new tax laws, but we look at lifestyle. We add in things that are not necessary, perform forensic services to look at disposable income and expenses, lifestyle analysis, I mentioned that, marital assets, and then we assess taxes. A lot of people don't think of taxes when you have a divorce. When property is passed from one spouse to another, there is no tax consequences at that particular time. But let's say they inherited or they got a piece of property, a beach house that they got in the divorce. There are tax consequences that go hand in hand with that. They might not get taxes right away, but they have to pay property taxes on that. And I had a client who their beach house property taxes were $30,000 a year.
Ooh, ouch.
Yeah. And so you have to consider all the tax issues. Any questions on
Yeah, I think
any?
you said something really important that people really sometimes don't understand is that you're paid through the attorney on behalf of the client. And the reason for that, and you mentioned it, but just to explain it a little bit further, is because that way the information that you figure out is privileged, it's work products. So if the attorney gets information that's not helpful for the client, they're not required to disclose it.
Exactly.
But what's so valuable is that you are coming in not with the goal of giving the client the answers that they want, but actually finding the truth. And that's so
Exactly.
important because the truth is what the judge is the fact finder. So you're really acting as a really investigator, really, to figure out,
Exactly.
okay, what do these people actually have? And then based on that, what is divisible, not what do they want to have.
Exactly. And with divorce, you have all kinds of emotions that are involved, and it's helpful to have a third party to just look at the facts. You know, I've had clients where they thought a financial issue was one way, and then when I started digging into it, it wasn't the case, but they're so involved emotionally, whatever circumstances, it's hard for them to have an objective opinion. So each state has their own laws pertaining to divorce. Three common areas are alimony, child support, and property distribution. We're talking about property distribution today. As far as alimony and child support, and my role is determining actual income and expenses. That helps to calculate that. Georgia is an equitable distribution state. And equitable does not always mean 50-50. It does not always mean equal. There are states such as California that are community property states, but Georgia is not a 50-50 community property state.
I think this is really important because, a huge part of a divorce case is determining what someone's income is. And you've got the cases that are easy, right? As a W-2 employee, and you can see their income. But then you've got really a big variety of cases where it might be someone who's in a cash business. So someone who's in the entertainment industry or the restaurant industry, or a barber, a hairdresser, owns a nail salon. All of those businesses are very hard to determine. And then on the flip side of that, you have executives who have a base salary, but then this very complex incentive structure.
Yes.
So as an attorney, people expect sometimes for us to be accountants, and that's not our role. But to have someone who really understands exactly what that is really valuable, because the income is used and is going to be what the judge decides, how they decide alimony and child support.
Yes, exactly.
So I can think of one client in particular that he had a very interesting pay schedule, and when he got hired on, he ended up getting this forgivable, massive loan, but it really wasn't a loan, because as he worked for the company, it got forgiven. And the other side had such a hard time understanding that a lot of their assets weren't really owned assets at this point, because he had to work for 5 more years to have that money.
Right.
And it was really a tough case. And we ended up having to get a specialist in so that they could explain to both sides of, hey, yes, I know this house looks like it's paid off, right? On paper, you have a house that's $300,000, it's paid off. But in reality, he has to work 5 more years, or he's going to have to pay back that money he got.
Right. And if the divorce ends right in the middle of those 5 years, then there are calculations involved.
Yes, exactly. So that's kind of a good tie-in to separate and marital property. So tell us a little bit about that and kind of what you've seen in your experience.
Okay, so separate property is property owned by only one of the parties. Non-marital property is what it's referred as. That is property that is brought into the marriage, gifted during the marriage, or inherited during the marriage. Then marital property is owned by both parties. It's also called community property or joint property. You can flip to the next slide. I kind of explained them a little bit more in detail. Again, brought into the marriage, separate property. Marital property includes income that you earn during the time that you're married, including rental income from rental properties, business income, also labor and efforts. So this is kind of a gray area. If you've got someone who manages, let's say, rental property, and the rental property was the other spouse's separate property in the beginning, the spouse that manages that property can get credit for their labor and efforts of managing that property, even though the actual property is separate. And so where it gets really tricky is when you commingle these two assets, these two types of assets together. So for example, you have someone who has a rental home before the marriage, so it's separate property. And then during the marriage, they sell it, and the proceeds are used to purchase a new asset, let's say a boat. And that boat, if the spouse's name is added to that boat, it becomes marital property. So even though the boat was purchased with funds from the rental house that was separate property, as soon as you add someone to the title, it becomes marital property. Same thing with an inheritance. If someone inherits stock, let's say Coca-Cola stock, so one spouse inherits Coca-Cola stock, and the other one manages it, even though spouse one inherited it, it's separate property, spouse two manages it, so they're trading it, buying and selling it, and so forth. It becomes part marital property at that point for the time and effort that is used. And then stock options, those get really complicated, because if the stock options were given before marriage, but they're not vested yet, there's certain rules. And if they are vested, or if they were given during the marriage. There's all kinds of calculations. And so it gets really complicated trying to figure out what is separate and what is marital. Also, if the money's put into a joint account and commingled, it becomes marital property. And you have to have someone who's an expert come in and do what's called tracing, and trace the funds back to the original source and see, was it separate? Was it earned during the marriage? What is the character of the asset?
Yeah, and I think so often some like people want to pick and choose, right? So they want to say, okay, well, I had $50,000 in this account, and then I put it in a joint account, and now 10 years later, there's 100,000, and so I should get 50 before it's split. But it's not that simple. It's
No.
figuring out then, okay, well, what was done with that initial 50? And you don't get to pick what was done when it was out of an account. It's not like you had it separated. So that
No.
gets super muddy. And I think something that we have found is a judge wants you to give them a answer, right? They don't want you to come in and say, judge, well, we think this is marital, and the other side say, well, we think this is separate. They're also not accountants, right? They're not specialists. They're not fraud investigators. They want you to give them a solution and be able to tell them why that's your solution.
Exactly. That's what I was just thinking about. Explaining them why. You can't just say, because, I put this money in there. You have to follow the documents and follow the money trail. And everything that I do has to be proven to the best. I mean, there are some assumptions that we make, and there are some methods that we use. But for the most part, we have to be able to refer back to a document that shows, okay, these are how we calculated the marital assets. These are how we calculated the separate assets. And we can't just pull it out of our hat and just guess.
Yeah, I think something that comes up a lot too that people think is very simple, but it's actually very complex is take a 401k, for example. And at the time that you get married, say there's $50,000 in that 401k. And then you're married for 10, 15 years. And then all of a sudden there's 200,000 in that 401k. Figuring out what is separate and what is marital, because you had gains and losses from that initial amount. And then figuring out how that was compounded on the top of each other. And we had a particular case that we ran this analysis, and running the numbers two separate ways was a swing of like $35,000 in one party's favor. So it's a
Mm-hmm.
huge difference financially when you think, well, it's just one account, it's not going to make that big of a difference, but it's amazing how much it really does. And if you don't have the ability to explain to the judge your position and why that is your answer, then it's very likely that if the other party can, he's going to rule in favor of them.
Exactly. And the longer that the parties are married, the more complicated it gets. The passage of time is a factor to consider when you're doing calculations. And there are some assumptions that need to be made. Rate of return, like you said, gains and losses, and what you think. A lot of times, married couples will just split it and just say, okay, they don't want to fool with it. And, it really has to be a cost benefit analysis for the client as well. So you don't want to pay an expert, such as myself, to chase after $1,000 asset. The asset has to be big enough to pay me to value it,
Mhm.
because the benefit of my services need to outweigh the cost of my services. So if the assets are not very big, a lot of times it's not worth it to fight over it. Just, make a decision.
Yeah. And I think something that is very interesting that you do that oh, I'm going to stop this because we've got that. There we go. Now I can see you big. I think something that you specialize in that really comes up a lot in our cases is the hiding assets. And can you tell us a little bit about, if a client comes in and they say, I think my husband has bank accounts that I don't know about, or my wife, either party, what steps do you take and how do you start to get to the bottom of that to figure out whether it's true or not?
The first thing we do is ask for documentation. And if one spouse is unaware of where the documents are, the attorneys can subpoena the records. So we have clients that are very organized, and they're the ones that handle the finances. And those are the cases that you can go through pretty quickly. You've got other cases where the spouse has no idea whatsoever. All they do is swipe their debit card or their credit card to pay expenses. They have no idea. So we request documentation, and we look at the bank statements. We look at the tax returns for 3 to 5 years, really depending upon how long the marriage was. And you can tell from a bank statement if it's being transferred to another account. The bank account numbers will be on there. The information will be on there. The bank statements tell a lot. And then, we try to dig and search and look and ask questions, do some research on the internet, do lifestyle analysis, and it gets pretty complicated.
Yeah, and I think that that's important. You mentioned the lifestyle analysis earlier, is that, if you see somebody who says, I make $20,000 a year, and then you get on their Instagram and you see that they've bought a brand new Bentley and that they are, staying at the Waldorf Hotel all the time, and you can see from their expenses that that's not the case, then there's money somewhere, right? And so then
Exactly.
it's tracking where that is, whether it's an issue of just grossly understating their income, or if it's of assets that are hidden somewhere else or in someone else's name.
Exactly. And a lot of times it could also be overstating expenses to show a lower income, using personal expenses as business expenses. And so we can take a business return and kind of go back through it and look and see what is the real income. Because a lot of business owners, they take a loss, especially the first couple of years, even though they do have money coming in, and they've chosen to maybe purchase a big asset, that they like, a computer or office equipment, and they go ahead and depreciate it right away, which means their income is lower, their taxes are lower. But when you're trying to figure out child support and alimony, that income is not accurate.
Mm-hmm. What would you say is your favorite part of what you do as far as it relates to divorce clients and your investigation or testifying? What's your favorite part of your job?
Well, I love working with different people and getting to know different clients. It's never the same. My job is never the same. A lot of people go and do the same thing every day, and I get bored if I'm not challenged and doing something new. So I love meeting people and learning about them. I love the helping aspect, because a lot of people don't understand finances, and it can get really complicated. And though I'm not an advocate for the client, I do provide a service that can help their attorney advocate for them. So I love the helping and serving other part of it. I love the investigation. I'm a big question asker. I'm always like, why? And I love finding the answers. And when you spend all this time in this work, and then you finally find it. Like, I worked on, this is not divorce related, but I worked on an embezzlement case, and finding the money is very rewarding. And it's just, I guess you have to be an accounting nerd to understand, but there's something about finding the money that is very exciting. And then investigative skills play into it. The thing about it is, with other areas of accounting, let's say audit, there's a lot of auditor's judgment. There's not a lot of concrete. And with forensic accounting, it's more concrete. There is an answer. There is, like, an auditor looks at materiality. So they may not even consider $100,000 expense in a $10 million company. For me, as a forensic accountant, I track down those dollars. And so it's not as abstract. And then tax, With the tax laws, I don't think I would ever enjoy doing taxes because it is the same thing over and over again. It's not a lot of challenge. So that's a long way of saying there's all different areas that I love about my job.
Yeah, it's almost like you're a PI, but for people's finances, really. I mean, because at
Absolutely.
the end of the day, you're not following them around to a hotel to see, who they might be spending the night with. But what you're doing is really digging in deep and figuring out what do these people actually have so that there can be a fair division of assets. Because the worst thing that happens is either one is in the dark, so they aren't getting a fair shake because they don't know. Or they have assets that aren't being properly divided, and so they're getting the short end of the stick just because they're taking the easy way out of saying, okay, well, we'll just, I just get my $50,000 back, and then we'll split the rest. Well, they might be entitled to three times that by that time.
Exactly. And people don't consider the appreciation of those assets over time. If you've got a 20-year marriage, like you said, that $50,000, it doesn't stay $50,000.
Hmm.
More than likely it's grown, if it's an appreciable asset.
Yeah. And I think something that happens that is super difficult for us that obviously you would understand much more is a lot of the times people have numerous sources of income with one employer. So they might have their salary 401k, but then they also might have stock, and it might be stock, vested stock and unvested stock or stock options. And sometimes the employee doesn't even understand that. So when we're
Exactly.
doing discovery, they're giving us things that they think is complete. And then as the attorney, we might think is complete. But in reality, we're missing a whole piece of the puzzle.
That happens so much. People think one thing and they didn't read the documents or they weren't given the proper documents and they have a whole different idea. And when we start looking at the documents and the finances and, we come up with the actual information, a lot of times people are shocked. Sometimes it's in their favor and they have a lot more than they thought, or sometimes it's not. And they were completely in the dark about certain things. You're right. It can get complicated. Employee contracts, they can be 20, 30 pages long, and most employees don't read them.
Yeah, definitely. I know you would be shocked to see what, people don't read. And especially when you get a packet from your company that deals with something with finances, it's like, okay, no, I'm falling asleep. Like it just says I have money and that's fine. Like I'm not going to read
Exactly.
what is vested, what is not, and all of that. But I think, one of the most difficult things that we come across, obviously separate and apart from custody, but financially is the separate and marital assets. And what you talked about is once they're commingled, figuring out what is a fair and equitable way to separate those. And is there still separate asset contained within that? And that's difficult if you don't have someone who has expertise who can come in and say, this is the number and here's why I've calculated it this way, to give an
Exactly.
answer to the court.
Yes, you don't want to be throwing darts at a dartboard and just hoping for the best. You want to have an actual opinion and documentation to back up that opinion, especially if the assets are really large. Because once I start digging, I can find actual numbers. They're not just guesses. They're not made up. They're actual facts.
Do you have any case that comes to mind that something completely, unexpected happened that you can tell us about, just to give us an example of, hey, this is what I expected and this is what happened?
So, on one case that I'm working on, the spouse handles the finances, and he was unaware of the other spouse's actual spending. They thought that they were spending about $150,000 a month, and they thought that that had increased over the year. But when I started digging, I found that it wasn't that big of an increase. They had always been spending that same amount. And so a lot of times they don't know. They think they know, and they'll tell me, okay, this asset is worth this, my income is this, where our expenses are whatever. And then when I start looking at them and I put everything together, it's like putting a puzzle together. A lot of times it's not what they think.
Yeah.
And like you mentioned at the beginning, the attorney does have the option of not including my report. And I mean, that's unfortunate that happens, but at least you have an understanding of what's actually going on, and not just taking the client's word for it. Because a lot of times, again, the emotions involved, they forget about stuff. They forget about assets. They forget about expenses or liabilities, or they just don't know.
Yeah, and then you're not going in blind as far as, hey, my client told me this, and so that's what I'm going with. And then you get to court and find out that that's not the case at all.
Exactly. Knowledge is power.
Yes, for sure. Well, Jenica, I really appreciate your time today. You are obviously so valuable to attorneys, but more importantly, valuable to the clients, and making sure that they are getting a fair distribution of the assets, whatever that looks like, and debts. But I really appreciate your time, and I look forward to working with you. I'm going to leave your information up here so that people can contact you directly if they want. And I look forward to working with you in the future. But thank you so much for your time today.
Yes, it's always a pleasure to talk to you. And hopefully we can reconvene in the fall and talk more about cryptocurrency and do some more investigating.
Yes, I am looking forward to that. One last mention on that is you and I have talked about this, but cryptocurrency is very new in our field. And it's, I think, going to be something where someone is hiding assets. And I think you've said that you've even started to see that. And so you're attending a conference in September.
Yes, I'm speaking at the Georgia Society of CPAs Fraud and Forensics Conference, and one of the topics is going to be cryptocurrency.
Great. So we're going to circle back together after that so that you have a little bit more information to provide everyone on just kind of what's coming down the channel with cryptocurrency, because right now it's not regulated. There's obviously talks about it being regulated here, and so what that's going to look like for people going through divorce and for people thinking about putting money into cryptocurrency. So I'm really looking forward to that.
Yes, I am too. Thank you so much for having me. It was great talking to you.
Yeah, thanks so much. Have a good day.
You too. Thank you.
Bye.